So I have to admit something. The title of this video is definitely a little bit of clickbait. Why would I use clickbait? Because I want you to watch this video. I think it's very important what we're going to talk about here today. Now, you see, when we look at the stock market, people tend to be either bullish or bearish, which means that they're either looking to buy something because I think everything goes up, or they're looking to be shorting something or not be in something because I think everything goes down. And while the market environment, there's basically 4 different market environments, and 2 out of those 4, everything will either go up if it's a bullish environment, or everything together will go lower, like all risk assets will go lower if things are bearish, if you will. But right now, we actually find ourselves in an environment where there's a ton of divergence or dispersion, I guess would be the more appropriate word to use, in between different asset classes, but also in between different sectors and groups in the stock market. And so, yes, I'm concerned about the market, and I am a little bit bearish. I'm not bearish in everything though, and I think that's the big deal. And so if you don't watch this video past this 1 minute and 20-second mark here right now, at least take this away, that this is an environment, or there are environments where there is lots of dispersions within the market. So let me show you guys a couple things to kind of hit this home. So what are the reasons why I'm bearish? So one reason, very simply, is because if you look at our market rover tool, a lot of sectors are short-term bearish. You can see a lot more red than green on the screen. That doesn't mean you have to short everything, but it's just to give you an idea. Another reason why I'm concerned about parts of the market is because of the way that the small capitalization stocks are acting. And this is actually one part of the market I'm concerned about. Like, for example, I'm not so bearish about, like, say, the S&P 500, because the S&P 500 has these large cap technology stocks in it, which I actually don't think will fall as much as other parts of the market. But the Russell 2000 represents small capitalization stocks. And just from a technical perspective, this is a weekly chart, by the way. Each increment is 1 week of time frame. You can see that we've been holding this yellow line as support, right? This is your it's your 50-week, which basically means it's the 200-day moving average, the yellow one. And you can see once we broke above it, it became support, support, support. But now, even though we marginally peaked above it a little while ago, we're finding a lot of resistance. And in fact, if you peel this chart back even more and you look at this on a monthly basis, you'll see that this area of resistance right here, we're actually developing a fairly bearish monthly candle. Now, the month is not over, of course, so I want to be very clear about that. But this is one reason of concern. Another part of the market that I'm watching very, very closely is essentially what's called low credit bonds. It's also known as, referred to as junk bonds. And junk bonds, to me, I've had sort of a breakout, fake out move. This is the HYG ETF that I just typed in here. You guys can see that right there, HYG. I do think ultimately this part of the market will break lower, and that is going to be very bad for small capitalization stocks. So this is another reason why I'm watching this relationship between small cap stocks versus high yield bonds. In fact, if we want to make a quick ratio chart, I'm going to take the IWM and I'm going to divide it by HYG. Basically, the reason why we're doing this is because small cap stocks, they have some leverage, and you can see it's more or less the same chart. The ratio is fairly close. It's almost the same chart. So I'm trying to show you the correlation between these two things. And so this is really the reason why I'm getting rather concerned about the market. But again, I'm not concerned about everything as much as I'm concerned about parts of the market. So yes, clickbait or not, this is what I had to say. I hope you find this helpful, and I'm going to continue to use clickbait until everyone watches these videos, because I think they're important, at least for perspective. Doesn't mean I'm always right, absolutely not. But at least this perspective that I think helps me articulate my own ideas, and I think gives people perspective. A lot of the stuff that I talk about here is stuff that I talk about with large investors, institutions, hedge funds, every single day and every single week, of course. So just so you guys know that where this kind of stuff comes from. Have a good start to the week. Talk to you soon.